If you're a business owner filing as a sole proprietorship, this video is perfect for you because I'm going to show you how to reduce your taxes plus also save for retirement at the same time. I'm going to go through all the details of what a SEP IRA is and tackle all the key information that you need to know. And the best way to tackle this is go through the who, what, where, when, why, and how. And what I mean by this is that we're going to break it down really simple so it's easy to understand. We're going to first tackle the who. Who does a SEP IRA relate to? Who will benefit from this? We're going to go through the what. What is a SEP IRA? What are the things that I need to know about it? Next, we're going to go through the why. Why is it important for me to do a SEP IRA? Why do I need to do it? Why do I even need to know about it? We're also going to go through the when, as in what other important due dates that you need to know about this. Lastly, we're going to go through the how, and this is the step-by-step instructions from beginning to end on what you need to do to accomplish a SEP IRA. So now let's talk about the who. Who qualifies for a SEP IRA? Pretty much anyone that is self-employed will qualify for a SEP IRA. If you have a sole proprietorship, an S corporation, or a partnership, you will qualify for a SEP IRA. So if you are not self-employed and you maybe get a W-2 from a company, you will not qualify for a SEP IRA. And for business owner, it's important that I emphasize when I make these recommendations to client, I make sure that the client who are business owners do not have any full-time employees, because full-time employees could cause them to be eligible for the company SEP IRA as a whole. And what's going to happen is that you as a business owner may have to also contribute on behalf of all of your employees that qualify. Now, there are qualifiers, so not all employees will qualify, but definitely make sure that if they are full-time employees, they have a chance to qualify. So we want to make sure that if you do have any full-time employees, that a SEP IRA might not be the best option for you. However, if you don't have any employees and you're just, say, a solopreneur where you're just working for yourself, then a SEP IRA could be perfect for you. Now, let's go over to what. What is a SEP IRA? It's basically a retirement account for self-employed individuals. As I stated earlier, self-employed individuals with no full-time employees. Also, what is important to know is that a SEP IRA is different from a traditional IRA. A SEP IRA may have higher contributions limit compared to a traditional IRA. So for this video, we're talking mainly about sole proprietorship. If you're an S corporation or a partnership, we'll have separate videos for that as well. In this video, again, we're talking about mainly for sole proprietorship. And for sole proprietorship, the contribution amount is based off the profit of your business. So after you take your revenue minus your expenses, that's your overall profit. And what we can do is with the SEP IRA, it allows you to take 20% or around 20% of your SEP IRA profit. And I use the word around 20% because it's not exactly 20%. It's actually closer to around 18 and 19%. But to make figures easy to understand, we do say 20%. So let's go through an example here. For a sole proprietorship that has a net profit of around $100,000, 20% of that, you can contribute $20,000 to a SEP IRA. Now let's talk about the why. Why do you as a taxpayer needs to know this? Why is it important for you to even try to do this? And the main reason is because the money that you put in is a tax deduction now. This means it's going to lower your overall taxes in the current year. The second reason why a SEP IRA is great to have is the flexibility. You are not bound to any certain amount every given year. What you can do is you can actually pick and choose how much to put in every single year as long as you don't go over the maximum amount. So if this year you're doing great and you want to contribute more, you could contribute the max. But let's just say next year, maybe business isn't doing so well, so you want to contribute a little less. So you could definitely elect to not contribute the max and contribute even zero or maybe even half of the max. But just know that you do have flexibility with the SEP IRAs, that you're not bound by any amount every single year, that you could put a high amount in one year and a low amount in another year. And the third reason is simplicity. A SEP IRA is really easy to set up and there are very low fees. All you really have to do is open it inside a brokerage account and just leave it open, and then you fund it every single year. And the reason why I put this in here is because this is actually more simple than any other retirement accounts for self-employed individuals, such as a solo 401k or defined benefit plan. So for solo 401k and defined benefit plan, those actually have higher fees and have a lot of more paperwork on an annual basis to file. So that's why I really like the SEP IRA, because it's so simple to open, so simple to maintain, and the fees are very low. Now let's talk about the when. These are important due dates that you must know when it comes to a SEP IRA. And the first due date is going to be April 15th of the following year. meaning that if you were to file your tax return for 2024, the contribution due date is actually April 15th on 2025. So you get 4.5 months after the year ends to contribute to your SEP IRA. So just because your year ended doesn't mean that you don't have a chance to still contribute to the SEP IRA, because you still have till April 15th of the following year to contribute to the SEP IRA. However, one thing to note is that you can actually extend the due date by filing an extension on your personal return. And if you file an extension on your personal return, it actually extends the due date for the SEP IRA contribution as well. So instead of April 15th, the extension that you file is going to allow you to have a new contribution due date by October 15th. So a great tip that I always give to clients is that if they maybe need more time to come up with the money to fund the SEP IRA, they can't make it by April 15th, I tell them to file an extension, because it'll give them an extra 6 months till October 15th to come up with the money to fund their SEP IRA. Or even if they need more time to decide if they want to even do a SEP IRA or not, filing an extension will give them an extra 6 months to decide. Now let's talk about the where. And before I talk about the where, I want to iterate that clients actually has to do the contribution themselves, meaning that for 401k, if you're working at a company, it's taken out of your paycheck every single paycheck. For SEP IRAs, it's not like that. It's actually you as the business owner to put the money and deposit it into the SEP IRA directly by the due date. So if your SEP IRA contribution is a high amount like $50,000, you have to make sure that you have $50,000 that you can deposit into the SEP IRA by the due date. So remember that no one is going to do the SEP IRA contribution for you except for you as the business owner. Me as a tax advisor or tax preparer for you, I'm not going to be able to make that contribution for you. You actually have to do it yourself and make the transfer to the SEP IRA yourself. In terms of where to do this, I usually advise clients to go to the bank that they're already banking with to see if they offer a SEP IRA. That's usually the easiest way. If they don't, no worries. You could also use other brokerage accounts such as Schwab, Fidelity, or Vanguard. There are many other brokerage accounts that also offer SEP IRA. Now let's talk about the how. How do we get this done? And this is the most important part, because I'm going to walk you through from beginning to end on how to contribute to a SEP IRA. So let's start with know your contribution amount. The first thing we need to know is how much you can contribute. What's the maximum you can contribute to a SEP IRA based off the profit of your business. And once we know the max, we could kind of go through the calculations to see, okay, what amount are you comfortable with to contribute to a SEP IRA? Do you want to put the max, or maybe you don't? Maybe you want to put a lower amount in, which is perfectly fine. All we need to know is what the max is and what range are you comfortable with when it comes to contributing to the SEP IRA. So the next step is that we have to make sure we find a brokerage account that you're going to use to contribute into the SEP IRA. And once you open a SEP IRA with that brokerage, we can start contributing into your SEP IRA. Once you know how much you want to contribute, all you have to do is transfer the money to your SEP IRA and make sure you apply it to the correct year, because they might ask you what year do you want to apply it to, and usually it's going to be the year before you're making a contribution. So if you're making a contribution, say April 1st of 2025, usually that's going to be for tax year 2024 filing. So it's important that if the brokerage does ask you what year you're applying the SEP IRA contribution to, that you make sure that you apply it to the correct year. And we want to make sure that the contribution is made by the due date, whether it's April 15th or maybe you file an extension and it's actually October 15th. So it's really important that you communicate with your accountant that the contribution will be or has already been made, because that's the only way the accountant's going to know to apply the correct amount to the tax return. A couple tips when it comes to confirming with your accountant: you want to confirm the amount that you're contributing and also confirm that you will do it by the due date. Those are two most important things. And once you confirm that, the account should be putting that onto the tax return. So the next step is that when you review the tax return, you're going to want to make sure that you know exactly where that deduction shows on it, so you get the tax savings. And it's going to show on a page called Adjustment to Income. So if you want the account to show you exactly where it is, they could definitely point that out for you. But just know that this deduction should show on your tax return under the Adjustment to Income page. And once that is done, your tax return should be ready to finalize. One thing I want to add is that when it comes to calculating a SEP IRA contribution, we usually have to wait till we get all the information into the tax return. So we have to make sure that we have all of your income and all of your expenses pretty much ready to finalize on the tax return, then we could figure out, okay, what is the overall profit? Because there's a lot of things that might change your overall profit on the tax return. So it's best to wait till we get everything in, such as your mileage, home office expense, maybe some depreciation. Once all that is figured in, we'll get the true net profit on the tax return, and that's usually the best time to calculate what your SEP IRA contribution will be. So in a way, this means that we really have to pretty much be almost done with your tax return before we can give you a contribution amount. Just because you're self-employed, don't think that the SEP IRA is your only option. You actually have multiple options depending on qualifications, how much you want to contribute, and what you're comfortable with. The first option I'd like to go over is traditional IRA. This is the simplest form. This usually has the lowest contribution amount. For this current year, as I'm taping this, it's only $6,500 maximum that you could contribute. So this is going to usually be your lowest amount that you could contribute. So if you're not looking to contribute that much, you just want to put a little bit in, the traditional IRA might be good. So even though you are self-employed, you could still have a traditional IRA. I should also mention that under here is also a Roth IRA if you wanted to do that as well. So as we've been talking about the SEP IRA, this is also an option, and this is probably the simplest option that I would suggest for self-employed individuals. Now there is another account called a Solo 401k. This is actually going to allow you to put more than a SEP IRA. The Solo 401k will also use 20% of your business profit in the calculation, but you also could add on top of that the normal 401k allowed annual contribution, which can be around $20,000 on top of that 20% that you already contributed. So it could be a lot more. And the Solo 401k is only recommended if you're looking to contribute a lot more than what the SEP IRA will allow. Now, if you want to contribute even way more than that, than what the Solo 401k offers, there's something called a defined benefit plan that will allow you to put way more into that account, possibly even 100% of your profit in the business. Just know that with the two accounts, Solo 401k and Defined Benefit Plan, they do have higher fees and they do require annual filings of certain forms to make sure that the account is up to date. So to summarize this is that the SEP IRA is a good account to have if you're looking for something simple, lower fees, and will provide you a decent amount to put towards retirement account. As a self-employed individual, sole proprietorship, you do have multiple options to choose from when it comes to what retirement accounts that you want to contribute to. And each of these retirement accounts, between traditional IRA, SEP IRA, Solo 401k, and Defined Benefit Plan, they all offer tax savings. It just comes down to, do you want to contribute a little or a lot? As a sole proprietorship business owner, now you know what a SEP IRA is and what you need to do to actually move forward if you're interested in contributing to a SEP IRA. I hope you find this video helpful. Please like and share like always, and we'll move on to the next.